Ray Dalio recently warned that AI could be the next big bubble, and that bubble could eventually burst. The question is, how do bubbles actually start? Because bubbles don't start the way most people think they do. They don't start with stupidity, they don't start with scams, and they definitely don't start with everyone believing they're in a bubble. In fact, most of the biggest bubbles in history started with something real. A bubble happens when expectations start growing faster than reality. People stop buying because something is valuable, they start buying because they believe someone else will pay even more later. And once that mindset spreads, things can get out of control very quickly. The first famous example is tulip mania in the Netherlands during the 1630s. Tulips became extremely popular and rare varieties started rising in price. At first, it seemed reasonable. Then, speculation took over. People began trading tulip contracts, and prices climbed to extraordinary levels. Some bulbs were reportedly worth more than houses. But eventually, buyers disappeared, confidence collapsed, and prices crashed. The flowers were still flowers. The expectations were the problem. Then came the South Sea bubble in 1720. The South Sea Company promised huge opportunities tied to trade and future profits. Investors became excited. Money flooded in. Prices soared. People believed they were witnessing the next great opportunity. But expectations rose far beyond reality. When confidence started fading, the bubble burst and fortunes disappeared almost overnight. Fast forward to the late 1990s, the internet arrived. And unlike tulips, this was genuinely revolutionary. People were right about that. The internet would change the world. But investors became so excited that many companies with little revenue, little profit, and sometimes no real business model saw their valuations explode. Anything connected to the internet attracted attention. Then reality showed up. Many of those expectations could not be justified. The dot-com bubble collapsed, wiping out enormous amounts of wealth. Yet the internet still transformed the world. The technology was real. The expectations were not. Then came the housing bubble before the 2008 financial crisis. People believed house prices would continue rising forever. Banks issued more loans. Borrowing increased. Risk expanded throughout the financial system. For years, it seemed like a perfect cycle, until it wasn't. Once housing prices weakened, confidence disappeared, lending froze, and the crisis spread across the global economy. Different asset, different century, different story, but the same pattern. A real opportunity appears, early investors make money, excitement grows, more people join, expectations become unrealistic, and eventually reality struggles to keep up. Now let's talk about AI. Unlike many speculative trends, AI is not a fantasy. It is already changing industries. Businesses are investing billions. Technology companies are racing to build new models and infrastructure. Productivity could improve dramatically over time. The opportunity is real. But that's exactly what makes this conversation interesting, because every major bubble in history also started with something people genuinely believed in. The debate today is not whether AI matters. The debate is whether expectations are becoming too optimistic. Investors are pouring massive amounts of money into AI-related companies. Valuations have climbed, predictions have become increasingly ambitious, and many people believe AI will reshape the economy faster than almost anything before it. Maybe they're right, maybe they're not. But the problem is that nobody truly knows, and that's what makes bubbles so difficult to identify in real time. When you're living through them, they rarely look obvious. They look exciting. They look logical. They look like the future. The people in the dot-com era weren't crazy for believing in the internet. They were simply too optimistic about how quickly reality would catch up. And that is the lesson history keeps repeating. A bubble is not created by innovation. A bubble is created when expectations grow faster than reality can support. So, is AI the next bubble? Maybe, maybe not. But if history teaches us anything, it's this. The most dangerous moment is when people stop asking what something is worth and start believing the price can only go higher.